Hi, my name's Libby Newman and I'm an investment strategist here at Vanguard. Welcome to this month's market and economic update. Let's start in the US. The Fed's congressional dual mandate is to ensure price stability and to foster maximum sustainable employment. In the lead up to the first rate cut in September, the Fed was pretty happy that inflation was moving towards target, but indicated a little bit of concern around the labour market's health. Our economists see the unemployment rate in the US as pretty much in line with NAIRU, which is the non-accelerating inflation rate of unemployment, so probably where you want to be. While the Fed may favour additional rate cuts to bring the policy rate closer to the estimate of neutral, we don't think those labour market conditions warrant an accelerated rate cutting cycle. And the data that's been released since that first rate cut also suggests that an aggressive cutting cycle is not really warranted at this point. In Australia, while the economy is growing at its slowest pace in decades in response to restrictive monetary policy, inflation, in the RBA's words, remains too high. The labour market is also still pretty tight. We continue to think that it'll be 2025 before the data shows sufficient progress for the RBA to contemplate easing. And so for the Melbourne Cup Day RBA meeting, we expect all the action to be at Flemington and at lunches around the country and not in the boardroom at Martin Place. Some of the biggest news of the month has come out of China. A Ministry of Finance briefing promised fiscal stimulus sufficient to ensure China hits its 5% GDP growth target for 2024, which the equity market was particularly excited about. We think that maybe there's not enough runway left in 2024 to quite meet that 5% target, but we still think they'll get quite close. The Ministry of Finance pledged in its October 12 briefing that forthcoming stimulus would address property market and local government debt challenges, but its failure to specify a headline dollar figure has left some observers a little bit disappointed. Vanguard sees these developments as suggesting that meaningful stimulus is forthcoming, but the amount required would possibly need National People's Congress approval. So we expect that specificity to be provided after the NPC's late October meeting. In Japan, the Bank of Japan has raised its policy interest rate twice this year from negative 0.1 to 0.25. And that's been in response to inflation. As our head of interest rates in the fixed income team has observed, there's been some restaurants in Japan who haven't changed their menu in 20 years because they haven't had any price changes. And that's a far cry from my local cafe, which seems to be changing their menu very, very regularly in response to price changes. The Bank of Japan has left the policy rate unchanged in the September meeting, and we expect that typically they'd time any change with policy rates with the release of their quarterly outlook. The next one of those is slated for January 2025. However, we think there's a chance that they might raise interest rates at the December 19 meeting, as we have some important inflation and business condition data on the horizon. We expect that an increase in real wages and inflation will give the Bank of Japan confidence to continue to hike rates in 2025 as the country emerges from a long era of stagnation. And though they'll have to be mindful of how global currency and equity markets respond to the narrowing of that interest rate gap between themselves and other major economies who are cutting. Plenty to read about in this month's edition, so please click the link to check it out.